So, as I said an hour ago, Owen's back with us today from his holiday, so he's back in full swing for his second bulletin. A quiet day's trading, but rising fuel prices in China beginning giving investors a few jitters, haven't they?
Yeah, as you say, the pretty quiet day on the Asian market, Stuart, not least because the Nikkei's closed for the spring bank holiday. So it's the Shanghai Composite, as Stuart says, taking the brunt of the losses. It has managed to pare back some of those losses in afternoon trading, but it's all about fuel prices. They're going to be raised by the government by around 6% this Tuesday. That, of course, off the back of rising inflation and concerns generally about where China's economy is heading over the next 12 months or so.
Well, let's take a bit of a look at those oil prices. Saudi Arabia trying to put the brakes on them, really, aren't they?
Yeah, oil price has almost been the sort of great unreported story of the past few months. We've been so fixated perhaps by the Eurozone crisis. And right at the time when the Eurozone and indeed countries like the US appear to be pulling ahead in terms of recovery, we've got oil prices threatening to go up towards those historic highs we saw back in 2008 of $147 a barrel. You can see there just around $125 a barrel. They have scaled back just a fraction in the last 24 hours or so. That was largely after Saudi Arabia announced that it will increase production just to try and put more capacity out there onto the market and bring down prices. It was interesting to note as well that the Saudis think that $100 a barrel is around about fair value or the fair price for oil. Now, I can remember just 2 or 3 years ago, before the Wall Street crash, people thought $75 a barrel was about right. So you can see it's still moving higher in terms of what people think is a fair price to pay.
OK, we're going to look at the Eurozone now. Although Owen is away, some other people have still been working on economics. Greece, they look like they're going to pull off their debt restructuring without a full-blown economic collapse. Did you know about this while you were off?
I did keep an eye on it. And yeah, don't hold your breath just yet. We're not completely out of the woods from Greece, but I think you can safely say this is the moment when Greece appeared to be able to put some of this sovereign debt crisis behind it. That was because, of course, over the last month or so, we've had this bond swap going on, the largest restructuring of sovereign debt ever undertaken under the terms of that second bailout agreed with the EU and the IMF. Yesterday, we got some important numbers about credit default swaps. The big concern, of course, something we've been talking about a lot the past few months, was that would those people who had those contracts, those insurance, kick them into effect and effectively trigger a full-blown default for Greece? Well, the upshot is that Greece or those credit default swap holders will receive around $2.5 billion in a payout on those CDS contracts. What it means, though, is existing bondholders, people who had these bonds invested in Greece during this whole sovereign debt crisis, they're going to have to write off around 78% of the value of that. Now, I say that because, remember, under the terms of this restructuring, we thought it'd be around 50%, and yet it was always assumed it would be higher than that. And that is confirmation that, indeed, those losses are higher than first thought. We've also got some numbers as well. Remember, under the terms of this bond swap, bondholders will get new bonds in return for their existing bonds, but the yields on 30-year bonds rose up to near 14%. Now, that's astonishingly high. Normally, countries can pay out those sort of yields on bonds of around 5 years or a little bit less short-term debt. But to have such strong yields on 30 years is huge amount. And it does raise questions about whether Greece can really sustain those kind of debts.
And the yields on the new bonds are always likely to be high, but are they sustainable, I suppose, is the next question.
Yeah, that is the question over the next 30 years or so. It's really too long for any country to sustain those sort of high levels of debt. It's led to many analysts wondering whether there is another restructuring in the pipeline, perhaps in the next couple of years or so. And you have to remember that growth in Greece is not going to be great. The Greek economy is only going to grow by around 0.5% over in 2013. So you're effectively saddling a whole generation of people with massively high borrowing costs that can only filter down into household lending over the next generation.
Essentially, though, the good news, it's a pass for Greece.
Yeah, you could almost say that because we've had this whole restructuring over the past month or so. That was the sort of nail-biting moment. This credit default swap has sort of drawn a line under that to some extent. And remember, Greece as well has secured that 130 billion euro second bailout that it will need to survive over the next few months or so. There is a change of foot in Greece as well. Over the weekend, we learned that the Greek government has uncovered a benefits fraud of welfare recipients amounting to around 100 million euros. So the government is making inroads in trying to scale back this widespread fraud that we've seen over the past few years.
Let's have a look now at a few more of the top day's business stories. That's what I'm trying to say. Started with Deutsche Börse, in fact, which is suing the EU over its failed mega merger with the New York Stock Exchange Euronext Group, the Frankfurt market operator, taking unilateral action against competition commissioners who blocked the transatlantic tie-up earlier this year. The EU fears the merger would unfairly dominate derivatives trading. Deutsche says the EU is out of touch with reality.
Formula One is on course for a stock market flotation that could value the sport at more than $10 billion. That's according to Bloomberg sources. Its understood majority shareholder CVC has hired Goldman Sachs to work on an IPO with Singapore, the likely target market. News Corp is among a number of firms who've previously expressed an interest in taking over Formula One, which has suffered from declining audiences over recent years.
And staying with sport finance, the New York Mets baseball team has settled a $300 million lawsuit with the trustee overseeing Bernard Madoff's financial affairs. The two sides settled before a trial aimed at ruling on whether the Mets knew about Madoff's fraudulent pyramid scheme before he was jailed for life. Under the deal, the Mets and Madoff's trustee will halve the disputed amount.
OK, well, let's stay with some company news, because if you hadn't noticed, then you've probably been asleep or perhaps not on this planet, because Apple launched their latest incarnation of the iPad over the weekend. The numbers are always good with Apple, but these, even by Apple standards, were pretty impressive. This company sold 4 million copies of its latest iPad model. You can see it there on sale over the weekend. Sold 4 million of those over just 3 days. Just to put that in context, Stuart, previous incarnations of this gadget, it took around 4 months or so for Apple to reach those kind of figures. So they did it in just over the weekend.
Incredible, isn't it? Now, those kind of figures, of course, what helped Apple generate a cash pile of $100 billion, famously hasn't paid a dividend since 1995, but that's changing as shareholders get ready for a big payout. But some are wondering if it's an early sign Apple running out of ideas on where to go next.
It's the first time in nearly 20 years Apple will start paying a quarterly dividend, $2.7 a share, some $45 billion in the next 3 years.
They certainly had a lot of pressure from shareholders to do that. Let's keep in mind they've had a humongous cash hoard. In general, tech companies, when they initiate dividends, it's not really seen as a positive, because the implication is, well, then they can't find other growth opportunities. And technology as a sector tends to be a growth sector.
Apple CEO Tim Cook said on Monday making great products remained the company's top priority. The new iPad, released this weekend along with Apple's iPhone and computers, should bring in enough cash by next year to cover for today's expenses. Some analysts say Apple could have spent the money elsewhere. Former CEO Steve Jobs refused to issue dividends, insisting the company's cash should be used, for instance, to take over smaller rivals. But Tim Cook's strategy shouldn't keep Apple from doing just that.
He still has maneuvering room to make acquisitions. There were rumours about a takeover of Twitter, and Twitter's worth $7 billion.
Also, Apple's share buyback, a bonus for the company's employees, will offset the shares they were awarded in the past few years.
That's a business for now. More from Owen, of course, in just over an hour's time. Good to have you back. And Melissa's here very shortly with the latest, of course, on those incidents in Toulouse.